history suggests the market has another leg down.
And best one-day performance in history. But be careful. This might be a trap, specifically a bull trap, because anytime you see performance like this during a bear market, there's a good chance it's what's called a bull trap, meaning it sucks bulls into the market before another big leg down. Wednesday's single day performance in the Nasdaq was 12.02% after a 25% drop from top to bottom over just the last couple of weeks. But this is not the first time the market has done something like this. In fact, if we look at the fifth best one-day performance in the Nasdaq in history, it was October 28th of 2008. You can see the Nasdaq was up 10.9% just in that single day. Zooming out from there, you can see that the market continued to rally a little bit longer before it puked one more time and finally bottomed, and then bottomed at the same place again in March of 2009 before the ultimate rally eventually really started. Next up, let's look at the fourth best single day performance in Nasdaq history. And that day is going to be December 5th of 2000. You can see on this day, the single day performance was 11.68%.
So yeah, I also want to speed this video up just slightly. It's taking a little slow for me. But this is something I've been warning y'all about, which is the market. It's the biggest moves in the market come during bear markets, right? But all these buy the dip people want to tell you, if you're out of the market the 10 best days of the year, then you're screwed. Dude, I'm pretty sure that this giant candle was the best day of 2025 and probably for several years before, maybe potentially several years from now. And if you had not been in the market leading up to that, you'd have been just fine. You would have been just fine. You would have missed that 10% up move. Big whoop. The market's down still 10% since that point. Yeah, no.
Fantastic day. But zooming out, you can see while the market did rise for the next couple of days, it ultimately continued in its bear market a lot farther down. And because this was part of the dot-com bubble bursting, it ultimately fell for a couple of years before it bottomed and began its new bull market. Now let's go to the third best single day performance in Nasdaq history. Here we are back to 2008. We are also back to October of 2008, specifically looking at October 13th. And you can see the market was up 12.58%. And because we have already looked at 2008, you know that zooming out shows that the market had not yet bottomed, went down from there before bottoming and starting a new.
Yeah, this is great. This is exactly what I've been telling you for a while, right? And so he's talking about this 13% up move in the midst of a downtrend. In the midst of a downtrend, that 13% up move, just ignore it. It's just noise. It's just like it never even happened in the middle of this downtrend right here. This is what you've got to keep in mind. Which direction is the trend going? And I don't know how many 10% up moves have happened during a bull market. I don't know how many. I could be wrong, but I would bet more have happened in bear markets than in bull markets. Just people clamoring to get in, all excited. Trump tweets, one thing or another, and then the stocks skyrocket. So yeah, a lot of short covering. Probably so. Probably so, Johnny.
Bull market. Now let's look at the number one best single day performance in Nasdaq history. And we are looking at January 3rd of 2001. And you can see in that one single day, the Nasdaq was up a monstrous 18.77%. But we have already looked at this dot-com bubble bursting, and we know already that
up 18% in the midst of the worst crash in ages. Who cares about the up 18%? Exactly. Bro, this is exactly the video I was looking for.
That was not the bottom either, and it continued to fall after a brief relief rally as well. Looking again at Wednesday's performance, 12% in a single day, we can see that performance numbers like this are not exactly in good company. In fact, for the Nasdaq, most of the time, this just means that it is a bull trap. In other words, we've got another leg down. But it's not just the Nasdaq. We can see similar patterns with the S&P 500 as well. On Wednesday, the S&P 500 was up 9.51%. You can see from this chart here, that is the third best.
Oh, here we go. I would love to see this. Okay, let's do some research on this. Oh, this is gonna be fun. Okay, so 2008, 2025. All right, so okay, we're gonna have to trying to think of the easiest way to do this. because I'm going to have to scroll for ages to get over to these points, but I really want to look at them with you. And this is why I tell people all the time, A, no mo FOMO, okay? Do not FOMO into anything. And B, if it's not part of your plan, just ignore the noise. Just ignore the noise. Okay, so we're to 2008 now. Perfect. Just ignore the noise. Awesome. Okay, so we're looking at October 13th and October 28th of 2008. October 13th and October 28th of 2008. So the 13th is here. Okay, so from the close to the next day, 14.5%. 14.5%. And then we'll do the second one while it's over here. I don't know about that. I mean, I'm going close to close right there. I don't know exactly what they're measuring. But let's do the next one here. October 28th. October 28th. 7/28. Okay. So close to close, 11.68, 10.6. Yeah, like I say, I'm not 100% sure what they're measuring right here. My numbers are a little bit different than theirs, but it doesn't matter. Imagine, right. Let's set the stage here. What if I told you you could get 1.5 years, 1.5 years of S&P returns in a single day? I bet you'd say, well, sign me up right now, Chris. Well, for the low price of $997, I will teach you my strategy. This strategy allows you to get in 1 day a year and make enough for a year and a half compared to the S&P 500. Are you ready? All right. So you guys Venmo me the 997. But in the meantime, look at this. Look at this. If you buy during the crash, you are guaranteed at some point to find a 14.5% up move. I mean, we've seen it in the past. It's got to happen again, right? Oh, not only that, but imagine just a couple days later buying during the crash again and then getting another 11%. So what I'm telling you is, between two trades, you can make 25% returns. And then you only even have to go to the market for the next 2 years. You don't even have to do anything for the next 2 years. Now, that'll be $997, please. Give me. Right? So many people on the YouTubes want to tell you that. So many people on the YouTubes want to tell you, you've got to buy during these downtrends because it has to go up from here. It must go up from here. Only price pays, and I do not have my megaphone to do it. And my sales technique sucks. I know. I'm sorry. Look at this, right? People love to talk about, oh, if you miss the big days in the market, you're going to be totally screwed. Bro, I would gladly not trade any one of these days. Not any of them, because the 10 is under the 20, price is under the 50. And you wonder why I say this is a universal principle, because it is. In June of 2008, we had that bearish crossover on the Outlier Trend Template, and it went down, came back up, but it went right back down. And this is why I say you might make a buck or lose a buck every once in a while, right? It kind of bounced around right here. The 10 was crossed over 20, price was over the 50. Either way, got in and out, no big deal. But then you would have avoided the huge move down, the giant move down, right? Maybe you made a buck, lose a buck, all the way down. And here is where it bottomed. Excuse me. Look at 10, 20, 50. Let's say we get a green light right there, right? Now we're going to do some real math. This is going to be great. Did I leave my... No, it's in the other room. Okay, hold tight. Hold tight for 5 seconds. I'll go grab it. Y'all listen to John real quick while I do this.
Single day performance in the S&P 500 for the last 50 years. I want you to pay close attention to the other dates on this table. October 13th of 2008, October 28th of 2008. Those were the number 1 and number 2 best performing days in the S&P 500 in the last 50 years. Those are the same dates as the Nasdaq, which we already saw. The market eventually moved lower from there, even though there was a relief rally for a few days following those performance numbers. We also have dates like March of 2020, October of 1987, March of 2009, April of 2020, and we see on this list a general pattern that we are looking at COVID, Great Financial Crisis, dot-com bubble bursting, and Black Monday. In other words, these massive up days in the market tend to happen when we are in crazy bear markets. And
Yup. I've been saying this for a while. Yup. All right, so I got my megaphone back. I got my props. So looking at this, looking at this, why would you feel compelled to buy during these trends? I couldn't imagine feeling compelled. Now, I was in college at that time. Okay, funny story. Actually, at this very moment, October 2008, I was in grad school working on my MBA, and I was in the student-led investment fund, right? And specifically, we were looking for opportunities to buy as the market's going down. Now, did any of us know better at the time? Clearly not. Clearly not. But looking back, it's like, what an obvious downtrend. What a horrible time to be involved in the market. And then the light shone down, right? Everything's better now. Everything's better now. So here's where we're going to do some math, and you're going to love math. I love math. You love math. This is going to be the best, right? So we're going to find a couple spots. First, we'll find one spot up here where I'm sure somebody was saying, now's the time to buy the dip. Now's the time to buy the dip. Let's say here, we've got a couple up days, and let's say somebody told you to buy the dip right here. So we're gonna mark on this. Buy the dip number 1. Okay. Now, YouTube was not as popular as it is today, but imagine at that time, it probably could have been. And then what happened? Huge sell-off. Now, price came back a little bit. Like I say, you might have lost $1 or made $1 in the midst here, but then you would have been out of the way when the huge waterfall came down. And then let's say you listened to those incredible people who were telling you, you've got to buy the dip. I've been telling you to buy the dip, right? So you bought the dip right here, right? You saw the 14% up move and you're like, oh my gosh, yes, buy the dip number 2. Finally, this is going to be easy money. And then, oh no, it goes down even further. And then they're like, you got to be buying the dip. You got to be buying the dip over here. Buy the dip number 3. After another update, and you're like, oh, I can't believe I missed out on an 11% gain on this day. Oh, and then it continues to go down and sideways. And then we zoom out and it goes down. Oh no. And it went down even further. Oh no. Oh no. So on these days, right, on these 3 days, had you bought the dip, you would be down to bottom 50% from the first one. Down 33% from the second one. Down 28% from the third one. So at no point in time are you profitable. Oh, no. And this is why losers average losers, right? Listen, I didn't say it. I don't know where you heard that from. I didn't say it. Paul Tudor Jones said it. Don't shoot the messenger. Paul Tudor Jones said it. He's one of the greatest traders ever. I didn't say it. Now, obviously, that means winners average winners. So imagine you waited for the outlier trend template to cross over with the 10 over the 20, price over the 50, and you got in right here. And then you held it for a minute, and you're up 17%. You're up 17% when this person is just getting back to break even. Let's let that sink in for a minute. You're up 17% when this person who's buying the dip is just now to break even. When this person is buying the dip as stocks are crashing down, you are up 17% as stocks are crashing up. Man, what a difference, right? And then you could have got out, and then you could have got right back in. Could have got right back in here. Now, hindsight's 20/20, I know that. But you could have got right back in right here. And then you would be up another 10%. So you already made 17%. Then you'd be up another 10% as the person over here is just getting back to break even. You're up, let's say, whole numbers here. Let's say you're up 27% at this point. This person is just getting back to break even. And then don't forget this guy who's way up here, right? This person's way up here. He bought the dip. And you could have been in and out multiple times, making bank the whole time. And he had to go from June of 2008 to May of 2011. So it took 3 entire years to get back to break even. And more than likely he didn't sell. More than likely he said, oh, finally I can make some money. And then what happened right after that? Another crash. So from May of 2011, he would finally get back to break even in February of 2012. So he would have gone from June of 2008 to February of 2012, nearly 4 entire calendar years, because he bought the dip. Whereas you are way smarter than that. You are an outlier. You understand the outlier trend template and why it matters with the 10 over the 20, price over the 50. And at no point in time would you have to stress, because you're buying it as stocks crash up versus as stocks crash down. You want to understand how to buy the dip? This right here is how you buy the dip correctly. You buy the dip on the right-hand side of the dip, not as it's crashing down. And forget all about those dumb up days. They mean nothing. In the context of this trend right here, they mean absolutely nothing, because this guy still had that 14% up move and that 11% up move under his belt as he's lost all this money. And did it benefit him at all? No, not in the least. Not in the least. Dana says it's worth not buying the dip just to avoid all the stress while the stocks are crashing. Yeah, dude. There's so much to it besides just your funds, right? You can be to profitability that much faster. You can be having that much less stress. And this is such a great example. I'm so glad John brought this up. But speaking of things John brought up, dude, do you see John changed his set? So he's now got a picture. It looks like the Monopoly Man and Scrooge McDuck, clearly AI generated. But I, as a Scrooge McDuck aficionado, Scrooge McDuck is my spirit animal. So I'd like to show you all the things I surround myself with all day. So first is this incredible DuckTales mug, which is messed up by my green screen just a little bit, that I drink from every single day. And no, I never wash it. Thank you for asking. Next is this limited edition Funko Pop with Scrooge swimming in his gold coins. I love this one. Followed by this second limited edition Scrooge McDuck Funko Pop. Yes. And then followed by this limited edition Scrooge McDuck in his Hot Wheels car. Yes, of course. And then followed by this limited edition Scrooge McDuck Lego set that it won't focus on. And then followed by this exceptionally limited edition 1 of 1 3D print that I printed out. And you can see the little glue stuff that I used to keep it on my desk. Yes, I am obsessed with Scrooge McDuck. He is my spirit animal. And not only that, I have a little head pillow that I use when I'm working, shaped as Scrooge McDuck. And not only that, last time I went to Disney World, I purchased something I definitely shouldn't have purchased because it was way too expensive. This incredible portrait that probably weighs 50 pounds because it's a solid ass wood frame of Scrooge McDuck. Oh, we're not done yet. I have this Scrooge McDuck picture that I love that hangs up right beside me all the time. Yes, me and Scrooge are best friends. That's right. Because you surround yourself with the people that you want to be like. And I want to be like a geriatric duck who swims in gold coins in his cartoon. Exactly. Let's continue on with this.
Most of the time, the market is not done selling off at that time. The market and investors overall are looking for any reason possible to buy, hoping that the damage is done. And so when you have the president of the United States who is throwing tariffs like spaghetti against the wall, saying that we are going to pause for 90 days, investors take that as a sign to pile back in. Given the speed at which a lot of money bought back into the markets here, this doesn't look to be mostly retail investors. Retail investors have been buying all the way down. If you didn't see my video about this yesterday, go watch that now. It's largely been institutions and hedge funds that have been getting squeezed out. But here's the other very important takeaway. Just because we probably have another leg down doesn't mean it's a bad time to buy. In fact, looking at this table, you can see on the right-hand side, the 1 year, 3 year, and 5 year performance of the market following these massive up days. And you can see that not a single one of these numbers is red or negative. In other words, historically, following the days that the market had these crazy ups, even though the market went down after that, there was not a single example of the market still being down 1 year later, 3 years later, or 5 years later.
Fair point. Very, very fair point. You know, looking back at the market, it has basically always gone up. We know this for sure. But you don't have to be in a stressful situation and in a worrisome situation like you would be had you bought the dip. You could actually go to cash, whole cash, and then make profits as the market continues to take 4 years to get back to its highs right there. Here's the deal. Buying the dip absolutely works, but be sure you're buying the dip as it's crashing up rather than crashing down.
You made money every single time. And if you notice, the worst performance on here is 10% up after 1 year following October of 2008. But some of these 1 year performance numbers are massive, like 56% in 2020 or 103% in 3 years following 2009. Now, if you feel confused and you don't know whether this is a signal to buy or sell and you feel like I'm giving you mixed signals, let me break it down very simply for you here. Number one, if you are just trading these markets, then these up and down days give you fantastic points to enter and exit, to load up on some calls and sell some puts, and then the next day to load up on some puts and sell some calls. Number two, if you are a long-term investor, at least a couple of years on your investing time horizon, it is times like this when markets have big sell-offs that are the best times in history to buy, especially if you're buying fantastic.
Well, hang on. Yes and no. By the way, I think John and I can make great content. I'm going to see if I can reach out to him and start collaborating with him. Yes, it is fantastic times to buy. And you know what I'm saying, on the way up. How do you know when it's the way up? You see the outlier trend template, and we can see it, right? We can see this. We can see that it goes up from here. But it keeps you out of trouble when trouble is afoot, and it keeps you in the market when things are working.
Assets, and you know how to make sure they're actually a good deal. If you don't, I've got a bear market investing guide. It's linked in the description below. There's a coupon code there you can use as well. This deal will only be available until the bear market is done, because then it's too late. But as a long-term investor, you need to be taking advantage of down markets like this. You can make money in bull markets, but people make fortunes during bear markets if they know what to buy and when to buy.
Yep, and I showed you exactly that. You can make a fortune, and in my example just a little bit ago, showing you how you could have made roughly 25 to 27% during the bear market. Cool, right? Cool, right? This is still technically during its bear market, because a bear market will go when it peaks and then goes down 20%. And then only once it goes back up to that peak again is the bear market over. So this right here, this is how you do it, because only price pays. You're not going to get paid on hopes and dreams. You're only going to get paid when price goes up. We know this. We know this for sure. So I don't know. I feel it's somewhat disingenuous to say just buy the dip. When you and I, John, you're smart enough to know this. You and I both know that they're not going to make any money, but they are going to make incredibly big headaches until it starts going back up. Right? We know this. We know this.
Buy. And finally, the biggest mistake of all here is to act like a trader when you are really a long-term investor. In other words, you are looking at these up days and thinking it's time to go all in, and then the market pukes and you get scared and go all cash. And then you look at days like yesterday where the market is up 10, 11, 12% in a single day and think the bleeding is done and go all in again. And then the following couple of days, everything dumps again. You get scared it's going even lower and you sell out, which means that you're acting kind of like a trader with your long-term investments, buying high and selling low, bleeding both ways. This is the worst of both worlds because you are losing every time you buy and every time you sell. You neither have a long-term outlook nor a short-term trader's outlook. Now, if you want a quick little tactic,
and he's got a great point here. Figure out your style of trading and investing. Follow that plan religiously, right? Wake up, follow that plan step by step by step, go to bed, repeat. And there should be times where you don't invest or trade anything. There should be times where you know the market is not working for your strategy, for your personal preferences, and you can just sit out.
For being able to participate in both being a long-term investor and accumulating assets at great prices for the long term, but also you want to take advantage of what's going on right now and trade around it. The strategy is called core and explore. You have your core positions that all you ever do is add to them. If you get a big lump sum or you get consistent income, you dollar cost average into that, that's your core. You never sell, you only build. Maybe that's around 80% of your total portfolio. And then with the other 20%, that's your explore portion. That's where you add to your positions if you think they're a good deal, and you subtract from your positions if you think they're too high. This allows you the freedom to be a short-term trader with some of your money and a long-term investor with the rest. If you're wrong about the timing, it doesn't really hurt you too much because you still have the core positioning that takes care of you for the long term. But if you're right, you can significantly add to those positions over time. So to summarize, if you are looking at a 10% up day in the market thinking that that is a sign the bear market is over and it's only going to go up from here, you're probably going to be wrong. And so going all in here just to get scared out later is going to be a bad move. 1 year, 3 years, 5 years down the road from now, it is almost certain, given history, that the markets will be higher from here. But you have to hold on and you can't get flushed out. And if you are a short-term trader, days like this are usually good opportunities to flip your positions and get ready for another move down. As always, thank you so much for watching. Have a great day.
He had great points in that video. Absolutely. I really appreciate him taking the time to go through and talk about how unimportant these up moves can be in the grand context of what the trend is doing, because the trend rules all. The trend rules all. You know what else rules all? You guys rule. You guys rule. Let me go through my slide deck real quick and introduce myself. I know I'm just some random guy on the internet, but my name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. Now, we need to go over to outlierdeal.com. Do that right now. Right now, go in your browser and go to outlierdeal.com. Over at outlierdeal.com, we have a contest running to celebrate the 3.0 release that comes out next week. Grand prize is $1,000 and a free year of Outlier. And if you're already an Outlier customer, we'll just tag it to the end of your plan that you have right now. So you'll get the second year on us. The first runner-up will get $200 worth of merch, $200 worth of Outlier swag, plus my 5 favorite trading book bundle. And then second runner-up will get $150 worth of merch, plus my 5 favorite trading book bundle. So all you got to do is head over here, put in your email address and your name, and then all we ask is, you watch a couple videos, repost a couple things on Twitter, follow us on Instagram, and leave a review. That's all we're asking for. We already have 5,927 entries. Can you believe that? 5,000 entries. And Leaderboard has Deep Thought over 187 points. He has hacked our servers. I don't know what he's doing to get that many. Nikolai has 172 and Art has 112. This is going to be so cool. I can't wait to give this away. So the contest will end on May 1st and the announcement for the winner will be on May 2nd. So you do that over at outlierdeal.com. Now, you're probably wondering what the secret code is for April 11th. Today's secret code is not Batman. Today's secret code, where's my slide? Hold tight. Today's secret code is contest. And if you're really clever, you can see all the secret codes there for the week. Today's secret code is contest. So be sure you put that in so that you can win a free year of Outlier and $1,000. How's that sound? That sounds pretty good, right? So real quick, what did we learn from this video? Type in the chat what we learned. I would say what we learned was, even though the market can have big ol' up days, it can FOMO in so many people that they honestly lose track of the risk that they had planned to have, and they get into trades that they wouldn't have made otherwise. Because, who's not excited about a 10% up move in a single day? Oh yeah, let's go. Does that mean it's the bottom? Not necessarily. Not necessarily. Christopher says DCA up the higher lows. There you go. Absolutely. And Baker says, that's me. I missed a huge move up and trying to figure out when to get in. Chris, help. Dude, I'm helping as much as I can. I'm telling you right here, this is it, right? If you're going to get into the market, wait for the market when the stocks are crashing up. Wait for the market when the stocks are crashing up versus when they're crashing down. Andy says, 10% don't mean nothing if you're down 20. Yes, sir. You are right about that. Brandon says, I've been wondering who this random guy on the internet was. I agree with you. Who is this random guy? Dorma says, I learned 10 over 20 over 50. Only that matters. That is your bullish trend. That is your bullish trend. Danny B says, when 3.0 is released, will we be able to see the historical charts of when it said buy and sell? Oh, yeah. Oh, yeah. Oh, speaking of, we need to show a couple things real quick. Theo says, Chris, I have some core stocks and I have a small amount of side. Okay. Hopecast, just because you were in the market for a huge gain doesn't mean it's a good thing if you weren't following the plan. Well said. Well said. Bender says, day trade the move up and sell to the dummies who are buying in the DCA. There you go. Francis says, thank you. Stocky Locky says, looking forward to 3.0. Speaking of, let's look at a couple of 3.0 things. Gosh, I'm running out of time. I have to meet Tom in 8 minutes. Let's do our member highlight real quick. Now, on our member highlight, I'm going to give away a Outlier hat. So if you're here watching live, you're going to have the opportunity to win an Outlier hat. But I'm also going to give away a $10 gift card to someone who put their big wins in on the Discord. This is so funny. You guys are so ridiculous. My big win of the week was Absolute Diamond from Simplify Guy. Yes, exactly. It's missing the DuckTales mug for sure. So over in our Discord, in the Share Your Big Wins section, what we do is we ask you to just tell us what you're doing with Outlier, what you're doing in the markets, and how it's helping you. Let me look at a couple real quick. Nye Hillick says, I have a net loss of $3,000 today. That sucks. It may not be a win to some, but it's a big win for him. I was deep in AMD and sold it all and cannot feel any better. Thanks to Chris and the team, a lesson learned, so much more learning to come. Yeah, and listen, I have had so many people in the chat say how I've saved them like $50,000 at least. Like that's what I'm here to do. That's what I'm here to do. Let's see. I'm going to show another one real quick. Thank you, Chris, for teaching me not to fight the trend from Jay Huber. Let's see. Pete, I can't how many idiot moves I made before finding Chris and company an outlier. Now instead of 2 out of 10 winning trades, it's more like 5 out of 10. Yay me, Chris, Mark, and Mahesh, and the rest of the Outlier team. Bless your kind hearts. Very cool. Thanks, Pete, for that. So if you entered into this, we actually already, it's too late, got all the contestants here for our giveaway. So let me type in the numbers real quick. So 1 equals this plus 1. And let's move this down. All right, so that is 20 contestants. So we're going to go to random.org. There we go, random.org. Verify that I'm a human. I am a random guy, so this should work. There we go. So we're going to say between 1 and 20. And then when I do this, it's going to generate a result. 3, 2, 1, go. 12. So the winner of the $10 Amazon gift card is Elroy HR. Congratulations, Elroy. Congrats to @Elroy for being this week's winner. And then April will send you that gift card on Monday. Now, what you guys are here for right now, let's give away an Outlier hat, just like I wear every morning. Let's see. All right. All you got to do is go into the chat function right now and type #outlier. The keyword is #outlier, OVTLYR. Let me choose this string we're in right now, which is the 11th. History suggests. There we go. Okay. So type in #outlier. Give you just a minute to do that. And then the entries will come into here and we'll pick a winner and give one of these away. Isn't this fun? Isn't this fun? I love this. I just discovered this a couple days ago. This morning was the first time I got to use it. So everybody's putting in #outlier. Very cool. Oh, that won't work. Christian, you got to do it again. It won't do till they sign outlier. You got to do it right. You got to do it right. Dana says, I hope it's big enough for my huge head. Let's see. Okay. Oh, M. Baker, that won't work. Try it again. Okay, I'm going to shut it down in just a second. Y'all get it in quick. We had, I think it was over 100 entries just in this morning's live stream. I see there are over 200 people watching live right now, so I expect this to be close to 200. Come on, people. There we go. Everybody's putting outlier in the chat. Be sure you do. I want to give this hat away to you. All right. We're gonna stop it here. If you haven't done it yet, it's too late. We're gonna do it in. I'm gonna click the draw button and it will draw for us. Ready? 3, 2, 1. I saw a couple entries come in. 3, 2, 1, go. All right, who's gonna be? Who's it gonna be? Jim R. Hey, Jim R. Congratulations, Jim R. You are the winner of this. Well, not this outlier hat. You don't want it with all my hairs falling out of my head stuck to the inside of it. We're going to send you a very clean outlier hat. So if you will do me a favor, Jim R., and none of you other bozos do the same, send us an email over at support@outlier.com, Jim R. Let us know your name and address, and we will send it your way. So congratulations to Jim. Now, real quick, I only got a couple minutes to show you this. So I'm going to show you a couple things. First, these are the official ready to roll signals that are going to go into Outlier. What you want to be looking at is the return column here, buy and hold versus a return like AMT, -11 or -7% in buy and hold versus 76% with the Outlier 3.0 signals. Amazon, 101% buy and hold. We can do better than that. 164% in outlier signals. But the real key to take away here is see how these exposure numbers are between like 30 and 60%. That's how much time you're in the stock. So for Amazon, it's a 53% of the time you're in, yet we made 164%. Isn't that crazy? Isn't that crazy? So what I calculated real quick was, what is the average return per trade? So this is the number of positions that we've measured since 2020, following our buy and sell signals. This is the average return. So return divided by average positions. Like, could you imagine every time you put a trade on, look at this one, APLD, this is bonkers. Could you imagine every time you put a trade on, this is your expectancy? This is cool. This is cool. So Outlier 3.0 comes out next week. Let's do a few of them just for fun real quick. PLTR. No, not PLTA, PLTR. Palantir. Look at this. 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 Only 50 positions over the course of time. Each position averaged 26%. That doesn't mean every single one averaged 26%. That means on average, with the 1,300% returns, yet only 50 trades, that's 26% each one. Let's look at JBL. Joe put in JBL. 198% of 82 trades, so 2.41%. 2.41%. Let's look at SoFi. SoFi, 66% buy and hold. Outlier is going to show it at 80 with only 32 trades. That's 2.51%. Keisha wants to look at Walmart. 140% buy and hold. Outlier shows 122, which you'd think, oh, that's not as good. But we're only in 58% at the time, which means 1.75% over 70 trades on average. Not bad. Not bad at all. So these are the returns. These are the signals that are going to go into the Outlier platform next week. How cool is that? 3.0 is going to be the biggest thing since sliced bread. I'm telling you, we are going to change not just trading. We're going to change the world. It's going to be the biggest deal ever. I am so oh no, that's not on contracts. That's on the stock itself. So imagine a 2% move in the stock could be a 20% move in your option contracts. Yeah, for sure. Listen, I got to bail. I got to go meet Tom Nash real quick and hopefully come up with the plan to start doing something cool with him. Maybe as soon as next week. We'll have to see. You guys have a fantastic weekend. YouTube is going to pop up a couple recommended videos. I recommend you click one of them, and I recommend you have a great weekend. I'll see you back here on Monday.